Welcome to your daily 5 minutes market brief with JP Morgan and Luna. Today is August 17th, 2025. I am Luna.
I am JP Morgan.
What's driving things?
Okay, let's dive into Friday then. It felt like a real mixed bag in the U.S. markets.
It really was.
The S&P 500 and the Nasdaq, they both slipped a bit, but the Dow Jones actually nudged higher. And that was pretty much down to United Health, right? It surged, 9 to 12%?
Yeah, huge jump after that Berkshire Hathaway news dropped.
So what's the bigger picture there, beyond just one stock?
Well, that United Health story shows how specific news can sometimes, really buck the trend. But even with the Dow up, the overall feeling by the close, pretty cautious. We definitely saw some profit taking, especially in those tech stocks that have been flying high.
Makes sense. And bonds.
Treasury yields ticked up again. The 10-year yield is near a 10-month high, actually.
So less optimism about Fed rate cuts soon.
Seems like it. Investors are weighing that stronger data we've seen against these persistent inflation worries.
Gotcha. And commodities. Oil was down.
Yep. Crude fell again, near $62.80. Gold was basically flat, and copper saw a small rise, mostly on supply issues.
Okay, so beyond the market moves themselves, what about the economic data that came out? That often tells a deeper story.
Absolutely. We got U.S. retail sales for July.
And they were pretty strong, right? Up 0.5%.
Yeah, robust number driven a lot by auto sales. It does suggest the consumer is still, spending, holding up.
But then you had industrial production.
Exactly. That went the other way. Slipped 0.1%. So manufacturing looks a bit stagnant.
And then the kicker seemed to be consumer sentiment.
Oh, definitely. The preliminary University of Michigan reading for August dropped sharply to 58.6, way below expectations.
Wow. And inflation expectations jumped too.
To 4.9%. It's fascinating, isn't it? People are spending, but they're feeling worse about the economy and worried about inflation.
Creates a real puzzle for the Fed, I imagine.
It's a total tug of war.
Yeah.
Do you focus on inflation or support growth? That tension is really defining the market mood right now.
And this wasn't just a U.S. story, right?
Yeah.
China's data also raised some flags.
Yeah, their July numbers showed a bigger slowdown than expected. Industrial output, retail sales both hit multi-month lows.
And the impact of that is pretty direct.
Oh, absolutely.
Yeah.
It puts immediate pressure on commodities, think crude oil, copper, because China's demand looks weaker.
Right.
And it also, ramps up expectations that Beijing might need to step in with more stimulus.
Okay, shifting gears a bit to geopolitics and trade. That Trump-Putin summit in Alaska happened.
It did. No breakthrough on a Ukraine ceasefire, though.
But Trump did pause those new oil sanctions on buyers of Russian crude. For a few weeks, at least.
Correct. And that took some heat off crude prices right away. We're probably looking at a bit of a bearish start for oil on Monday because supply looks ample for now.
Interesting. Raises the stakes if those talks eventually fail, though.
Definitely. And trade elsewhere seems tricky, too. The U.S. and EU couldn't seal a trade.
Yeah, stalled over the EU's digital rules, the Digital Services Act. Creates some uncertainty for U.S. tech firms over there.
And then the U.S. also canceled trade talks with India for August.
Over India buying Russian oil, citing tariffs.
That was the reason given. It hit the rupee and Indian stocks.
But U.S.-China talks are still happening.
In London, yes. Reports suggest some incremental progress there. Slow going, but moving.
So it all just paints a picture of ongoing global trade friction, doesn't it?
It really does. Lots of moving parts, creating volatility in specific sectors. You constantly have to watch these relationships.
So looking ahead to Monday, August 18th, what data points should folks be watching closely?
Two key things. First, U.S. housing market sentiment, the NAHB index, gives us a read on homebuilder confidence.
Okay. Important for the housing sector's health.
And second, the NY Fed's survey on consumer expectations, specifically the labor market part, that gives clues about jobs and wages.
And both could influence how people think about the Fed.
Exactly. They could really set the tone for the week ahead.
Okay, so let's wrap this up. What's the main takeaway for you, the listener, from all this? Fridays seem to show markets trying to balance some decent economic activity against these persistent global risks.
That's a good summary. You've got consumer strength, but also inflation fears, trade issues, geopolitics. It's complex.
Right.
Staying on top of these macro factors helps you understand why prices are moving the way they are.
It's about the bigger picture trends.
Precisely. That helps you navigate things with a bit more confidence. So maybe think about what stands out most to you for the week ahead. What piece of this puzzle feels most critical right now?
You've seen the headlines, but what really moves your portfolio? Money.ai scans 1.3 million signals a day,
earnings, sentiment, macro shifts, and turns it into one personalized briefing focused on your holdings. No noise, no guesswork, just what matters. Money.ai, know what moves your money.